All right. What's going on? What's going on? Welcome. All right, let me turn my music down. All right, welcome to Millionaire Challenge Mondays, Christmas edition. All right, so if you don't know the format of Millionaire Challenge Mondays, what I would like for you to do is I want you to write whatever stock you want me to analyze in the comment section. And while we're waiting for more people to come, I'll put out my promotional stuff and how you can find me and where you can find my products. And then we'll get to your stocks. All right. So I do this every Monday so that I can analyze your stocks. I want to analyze your stocks and I want to show you guys how to make money really, really quickly. All right. You're learning from an actual millionaire, right? So I want to try to teach you guys some of the strategies that I use, some of the strategies and techniques I've been using over the last 10 years. And I want to give you guys this information for free because there's a whole bunch of YouTubers and a whole bunch of Instagrammers that talk the talk but don't really walk the walk. And I'm a unicorn. So I'm going to show you guys, I've shown you guys some receipts. I've shown you guys what to buy. I've predicted certain things happening with certain stocks, with certain cryptocurrency. So, that's kind of like my claim to fame, right? So I'm trying to show you guys how to position yourselves in the market so that you can make money in the market. So if you don't know what Millionaire Challenge is or how to make money or the quickest way to make money, the quickest way to make money is this. All right. So the quickest way to making money in the stock market, in the crypto market, in the options market is to try to get 100% return. All right. It's the fastest way to getting to $1 million. Saving $50,000 a year for 20 years is what you're doing in your boring accounts. And I'm trying to teach you guys how to do everything. So LeBron James have always been one of my favorite athletes. Sorry for you guys that hate on LeBron James, but LeBron James has an all-around game. And that's what you get with me. I got an all-around game. I can see the market short term, medium term, and long term. I'm not a one-trick pony. All right. I have my boring IRA, invested in the S&P, and a couple of stocks and a couple of crypto, and that boring account earns about 10 to 15% a year. I've actually been averaging about 17% in my boring, stable foundation. But this is not what, this segment is not for your boring accounts. This is for your accounts that you're doing on your own. I try to teach you how to take 10% of your assets. So if you got $100,000 account, guys, quit trading $100,000 in the options market. All right, if you got $100,000 account, you should be trading 10,000. This is what the other educators are not telling you because they are not millionaires yet. All right, so I'm trying to tell you guys how to position yourselves in the market so that you can always win. I'm invested in those boring ETFs and indexes too. I don't even like talking about it. But I'm also invested in cryptocurrency, the cannabis market, the electric cars, right? I'm doing options, I'm doing futures, I'm doing all of that stuff, but I'm also doing that in separate accounts, all right, that are way smaller than my foundation. I'm trying to teach you educators that are watching how to really teach. All right. So during this segment, I want to change the way that you view the market because you guys have been viewing the market totally wrong. All right, investing and trading in the stock market is actually really really easy, and I'm gonna show you guys how to do it for free. Why? Because I make my money through investing, not through education. So I am a full-time day trader. This is what I do full-time. I'm an expert in stocks, options, futures, and cryptocurrency. I have over 10 years, over 25,000 hours of trading and investing experience. And anything that we talk about today are the opinions of what would Joel do or Joel Harrison. All right. So what I try to do is I want to make sure that, when you're looking at a stock, when you're looking at an investment, when you're looking at an asset and you're trying to think about how you want to approach it, You should be able to answer all the questions, right? The what, when, where, why, how. If you can't answer those foundational questions, then you shouldn't be buying that asset. And most of you guys don't. Y'all will buy something, and then I'll ask you, how long are you going to do it? How much money you want to make? And you can't answer that question. So you're in fact gambling. All right. So I'm trying to teach you guys how to look at the market the correct way so that you can treat it like a business. All right. Hold on. I'm trying to get used to this technology stuff. All right. So investing and trading is easy. You make it hard. Investing and trading is easy. Y'all make it hard. Y'all complicate things. You don't simplify things. You use 45 different indicators. You're in 17 rooms. You got 10 coaches trying to teach you the market. And every athlete, every individual that's doing well, every person that has a trainer, we don't have 10, 15 trainers teaching us our health. We'll have one trainer, right? We go to one gym, right? And we have a set thing that we do to try to get to where we want to be. You guys approach the market totally different. You shouldn't have 15 indicators trying to tell you when a stock is going up or down. Think about it. The stock market goes up or down, goes up or down, goes up or down. Got a 50% chance of winning, but y'all got 45 indicators. That makes no sense. All right, so I'm gonna teach you guys how to look at the market and what to look for when you're trading. So investing and trading is actually easy if you learn my methods. All right, you can go out there and learn all the methods in the world, but it's gonna bring you back to the foundation and the fundamentals. There's a reason why Stephen Curry can shoot threes from all over the place. It's not just because he's throwing it up, right? He's perfected, the art. He perfected the art of shooting the ball. So he can close his eyes and shoot, right? Because if your form and your foundation is there, it becomes really, really easy. All right. He's not learning how to shoot from 25 different people. All right. This is very important because this is why most of you guys lose. I know I spend a lot of time talking about keeping things very simple, but it's the reason why you're losing in the market, and the market's been going straight up. There's no reason why anybody shouldn't have been making any money. If you go and you look at a chart, everything for the past 24 months has been going straight up. So how are you losing? All right, it's because you're thinking too hard. So what is the Millionaire Challenge? The Millionaire Challenge is emptying your mind, being formless, shapeless like water. When you're trading the market and you're trying to make money in the market, for you counter trenders that are out there that think that you can time the market, I'm just going to time the market because that's when the pension funds and the mutual funds are going to buy. You're probably the reason why people suffer in the market. All right, because traders understand that when you're trying to make money really really fast, you got to go off of momentum, off of something that starts to gain momentum and then move. You guys try to get in front of a moving train. That's why you're losing money in the market. Now, that's a great investing strategy, terrible trading strategy. 99% of you educators out there are teaching that because you didn't learn from anybody. All right. I'm sorry I'm calling you guys out, but that's just what I do. All right. Empty your mind. All right. I want you to be formless, shapeless like water. If the market's going up, you want to go up with the market. If the market's going down, like today, you want to trade the market to the downside, but you also got to figure out what time frame you trade on. Like, are you getting in and out today? Are you getting in and out in 14 days, 30 days, or a year? That's 4 different strategies. But when you approach the market with one strategy, trying to trade that same strategy over 4 different time periods, 4 different volatilities, that's why you struggle. I literally have 4 different brains and 4 different strategies for 4 different accounts. All right. And that's why investing and trading is easy for me. Now, this is the Millionaire Challenge, right? So, on my trek to becoming a millionaire, it was very easy to get to about level 7. All right. Most of us, job, 401k, IRA, saving a little bit, buying your first piece of real estate, you're going to get to 100,000. Most people, if you just go out there and get a job, right, and you got a little bit of foundation, you're probably 1,000 there, 100,000 there, right? That's a very achievable goal. The hardest part is getting from 100 to a million. All right. That was the hardest thing for me to do because once those numbers start to increase in value, it takes you a long time to get there. It's just like Apple. Apple took a long time to get to $1 trillion. Then once it got to $1 trillion, it was easy for it to go to 2 trillion and 3 trillion. Most of you guys don't even know what that means, right? Which is why you got to get educated. That's the market capitalization of Apple. Once it got to $1 trillion, it took 30 years for that to happen. But then once it got there and it achieved that goal, it was hard to get to two, and now it's trying to push three. All right. And now Apple might end up being the first $10 trillion company when we thought that we wouldn't even see $1 trillion company in our lifetimes. So, you got to start allowing yourself to understand that it is going to get hard when you get to this particular level, but you got to get to that level first. So I want you guys to set a goal for yourself, take this picture, figure out where you are, and realize that the first 7 steps are the easiest. The last 3 are going to be the hardest. And then once you get here, then you can start trying to push for 10 million like me and my family. All right. I want you guys to use some of my methods. All right. The what would your method of entry and exit is a flag pattern. Joe, that ain't nothing but a flag pattern. I know it's a flag pattern. All right. But it's a flag pattern that has a set stop loss. I also incorporated the TTM trend. We're going to learn about that today. And the TTM trend. And I'm gonna introduce the Ichimoku to some of you guys. All right. So my method of getting in is this, and the way that it works is you want to see something that pushes up in value. If it doesn't push back to the lows from where it started, from where your buddy said he got in at, which he was probably lying, right? Probably took 10 different times to get this particular spot. But once that stock starts to move, it comes down and it starts to go up again. All right. I like to get in on that third wave. All right. Because the third wave is the real wave. The first wave, we don't know. The second wave, we watch it to see if it can go back to here. If it can't go back to here and people are willing to buy it at a higher price, then you have a real move on your hands. And this is what I've been using as momentum. All right. You want to be a momentum chaser. Yes. When you see crypto start running and you're a trader, that's actually when you're supposed to get in. I know they teach you to buy low and sell high. That's an investing strategy. That's not a trading strategy. Buying low and selling high is how traders buy off of flag patterns. The best of the best are going to tell you that. Again, don't be afraid when things fall in price. All right, when things fall in price, guys, it's the best time to buy it. You'll do it in real estate. You'll do it if you go and see a car for sale, 50 or 60% off. You did it for the Christmas, you did it for Christmas, right? You went and looked at products that you wanted to buy for Christmas. And when it was off 50, 60, 70%, you went out there to go buy it. But, when the stock market sells off, you guys panic and then sell your whole portfolios. That makes absolutely no sense, right? I want you guys to start looking at stocks like real estate. Why would you sell your real estate, right? Are you selling your real estate now off of this market crash? Then why are you selling your stocks? All right, but that's an investing strategy. The quickest way to getting to 100% is buying something that's 50% off. All right, as long as we can find stocks that are pushing up in price, if they can fall 50 or 60%, go back to their all-time highs, that's your first 100% return. I know a lot of teachers don't teach all this because they don't actually trade and invest. And I try to expose those teachers that are out there. All right. A lot of educators out there I've seen all over the place making millions of dollars a year teaching you guys the wrong stuff. All right. So I'm trying to teach you guys from experience, not from something that I read in a book. All right. Again, if you want your charts to look like mine, the charts that I'm going to show you guys today that's on the TD Ameritrade platform, they're going to be really, really beautiful. If you want your charts to look like mine, all right, you can download this video, and it's an hour video. It's going to walk you through how to set up your charts so that they look exactly like mine. Exactly. All right. If you haven't downloaded my app, go out and do it now. It's free. It's a free app that has been helping, thousands of people. All right, it's free. There is an alert service there. All right, I do have an alert service for people that may have 9 to 5s. I have an alert service for people that are trading. I have an alert service for people that need education. All right, there's something for everybody through the What Would Joe Do app. And as I start to make more money and I build it, it's going to become a lot better. And anybody that's in the alert system now are going to get grandfathered in before the prices start going up. Through the app, which a lot of people don't realize I have, there's an ultimate membership plan, right? And although I have a lot of people that are in the ultimate membership, I haven't really been pushing it that much, and I apologize for that. Again, I make most of my money through investing. But there's unlimited access to over 20 hours of the videos that I've created, right? So if you have taken, if you've seen the ultimate package on PayHip, well, imagine being able to get all of those videos and updated stuff at $50 a month. I realized that during these times, especially during COVID, that everybody doesn't have the capital to be able to pay $400 for a class. My job is to try to make sure that everybody is able to get educated in this market. All right. Because I remember how I was, and I didn't have anybody to talk to that can teach me the market. And I wish I could have met somebody like myself that actually had experience that could walk me through the market the way that it's supposed to be walked through. All right. But I show you what I'm invested in, what I'm actually invested in. Okay. I put out alerts for hot stocks. If I believe the market's not doing that well in the morning, like today, you're not going to get that many alerts. Unusual options activity are for people that understand the options market. And then percent gainers list if you just want to know what the hot stocks are that day and you might want to trade it. Again, I want to make sure that you go through my educational classes so that you know how to use this alert system to your advantage. We're going to get to the stock soon. All right. A couple of places where you guys can find me. If you're on Instagram, you can go to the Insider Trading Millionaire Challenge page there. It is growing at a rapid rate. All right. So I put funny memes out there. That's actually where I show a lot of my receipts. Right. So the minute I get 100% return on an investment, I usually post it in that particular, I post it on that particular page. The Insider Trading Room on Facebook, which also has over 20,000 members, is where you're going to be able to rub elbows with real traders. I screen every single solitary post that comes through, and that's why you don't have a bunch of flim flam out there. Everything that's being posted, there's some type of education there that can help you. If you just come into the room and say, look, I just made $20,000 a day, I'm not posting it because everybody makes 10, 15, 20. I know you feel good about yourself. There are posts where we can add that, but I want you to add some education to it because this is what I'm doing. I'm giving this information out for free because there's so much money in the stock market. There's no reason for me to keep all of this education, all of this knowledge to myself. I know knowledge is key and knowledge is worth money and what have you. But I rather give you guys that knowledge, and the more people that I come in contact with, it comes back to me tenfold. That's why I'm pretty blessed. All right. If you bought any of my products, you can always go to the Ninja Trading Room. If you go to the Ninja Trading Room, you're going to be able to get free access to that Ninja Trading Room. And that's just a room for traders. And then my poor YouTube that I'm trying to build. If you want to see videos, I know a lot of people that are like, Joel, I'm not on Instagram or Facebook because the fans are following me. So then I'm starting to put a lot of free content on YouTube so that you guys can also find me there. All right, again, the Insider Trading Room. This is where you're going to see a lot of my receipts. This is what other educators are not going to do because they're not investing in trading. All right, they're just taking your money from education. I show y'all what I bought. I made 169% on Apple, and I showed you guys when I was buying on segments like this. So you can come along with the ride with me if you're interested in buying what millionaires are buying, right? So I have no problem showing what I'm buying. I've developed a strategy and a system that I'm very, very confident in, and it's been working for me for the last decade. So let's get to some stocks. I think that was it. Again, if you want to get educated right now, you can go to my PayHip. You can learn about the stock market for you beginners. If this is over your head, this is the video that you buy. This is the video that I send all my beginners to. Whether you're in fifth grade or above, you're going to be able to follow along with this video. And it's 3.5 hours. I promise you, when you watch it, it's going to feel like it's 30 minutes because it's chock full of gems that you're not going to hear from YouTube or from some of these Reddit rooms, right? It's real life understanding how to position yourself in the market. All right, if you want your charts to look like mine, you go here. Options is the ultimate trading tool. I'm going to show you guys a couple of options. Well, I'm going to look at some of you guys' options, trades, and unusual options activities, show you how to approach it. And then I have 60-minute trading, which is for people that want to treat this like a business and they want to earn income daily. It's not for your 9 to 5ers, all right? But it is a skill that I think everybody should develop because we all can provide a service. I'm providing a service right now, but how many of us can actually make a dollar, make another dollar? Most of us don't have that skill. If that service that you provide gets taken away from you, how are you going to generate income? If you have money, I don't need to have a job if I know how to generate income. And 99% of you guys don't know how to do it. You try to do it through another business. Remember, the stock market, there's no overhead except for your computer and your knowledge. So, this is the building blocks of business that we were not taught when we were young, that you're learning now. And I want you guys to start spreading the word and teaching other people how to do it as well. So, let's get to these stocks. I hate doing this, but let's get to the stock market. This is what I love. This is what I enjoy. This is what I have a passion for. And let's get to some of you guys' stocks. Let me pull up the comments and see what some of you guys are want me to. All right, so we're going to look at Roblox. We have Alfredo. I know Alfredo. I don't know if that's a stock, but we'll take a look at it. I guess you're saying cheese. All right, we'll take a look at Apple. We have Ford. We have a question that came in that says, hey, buy that chart setup that pays for itself. You will trade better. I am not a paid spokesperson. Guys, I don't pay people for testimonials. I really appreciate when you guys say great things about some of the things that I do. It warms my heart because that's why I'm doing this. I see a lot of people tagging people, which is great. And we'll also look at Nike. But let's start off with the S&P 500. Okay. So again, if you want me to look at your stocks, go ahead and go into the comment section. When you go into the comment section, just put that stock and I'm going to look at it. Now, if you want me to look at it as a day trade or a swing trade or an investment, specify that as well. Otherwise, I'm going to look at it long term and then I'm going to look at maybe some options for it, maybe look and see if you were day trading it today, how much money you could have made. But let's see. When I woke up this morning, this is what I saw. Did you guys see this when you woke up this morning? Because if you didn't see this morning, this is probably why you lost money to the upside. Now, y'all see how easy that was? I pulled up this and I said, woo, the market doesn't look too good today. If I want to make money, it's to the downside. I knew that by 9:32. Did you know that? If you didn't, you ain't educated on the market because you don't understand how the market works, right? You're thinking like an investor. Because investors, if they saw the market like this, they said, oh, it's time to buy to the upside, but I'm probably going to hold it for 365 days. The trading minds was like, oh, the market's on sale today. Let me buy it. Maybe it's going to go up in the next 7 to 10 days. That is a terrible trading strategy. You don't buy things like this as a trade for 7 to 10 days because the market probably for the next 7 to 10 days is going to go down. That's why y'all lose money. All right. Because you don't understand how to go with the flow of the market. You don't know if you're trading or investing. You don't know the time frame that you're in. So I want you guys to start thinking 3 different ways. Am I getting in and out the same day? Am I getting in and I want to make money in the next 10 days? Or is it 30 days or longer? If it's 30 days or longer, maybe today is a great take to buy something, but I got to give myself 30, 60, 90, 120 days to make money. Because if you want to make money for the next 7 to 10 days, everybody and their mama has known to been betting on the market going down. And if you had woke up this morning and you had pulled this, everybody and their mama knew to trade the market to the downside. Very easy way to understand the market. All right. Simplicity. All right. KISS. Keep it super simple. Keep it super simple. On my wall, I put Anyway, keep it super simple. I don't want to be too negative today. All right. So I got it. So when I woke up this morning, I said, man, the market looks terrible. Looks like an investing day. Or if I'm going to trade, looks like I'm going to trade it to the downside. Literally what I thought at 932, 933. If you had done that, you would have made money easily. Easy money. If you're trying to fight the trend, if you're trying to get in front of a moving train, that's why you lost money today. Everybody and their mama selling and you go, everybody's running out of a burning building and you running in the building. I'm going to save everybody. I'm going to turn the market around because I can time the market because I'm a super trader. No, you're not. Super traders don't. I ain't never met nobody. I never met a counter trending trader that made money consistently. Never, ever. And if they claim to be great, they never show their receipts. They never show what they've done. They just say that they're great. I've never met one. All right, because most momentum traders know to go with momentum. It's just like flipping houses. Everybody knows that when you're flipping houses, you flip houses in areas that are hot, where people are buying it, where there's multiple contracts that are being placed on those properties. The properties are on the market for 3 days. They don't go 50 miles outside of the metropolitan area and flip a house where nobody knows about. All right, that's what y'all do in the stock market. Okay. You got to go with the trends if you're trying to make money as a trader, if you're trying to get 100% return. All right, so let's look at the S&P 500. The S&P 500 represents the 500 largest companies in America. All right. Uh-oh, hold on. Let's go to a clean chart. All right, so looking at the S&P 500, when you pull up the 200-day moving average, what do we notice? We notice that the market's been going straight up. Very easy trade. I don't know how y'all lost money. Anybody that lost money in the last 24 months, fire your teacher. Because it makes no sense. What I'm going to teach you guys today is going to be a magic trick. It's going to be a magic trick today. Watch this. For the cost of nothing, every single stock that y'all give me today, this is what we're going to look for. We're going to look for this little blue line. If it's above that blue line, if it comes back and it touches that blue line, most of the time, 100 days later, you're probably going to be in the profit. If that line is angled down, we're not going to buy it. Did y'all hear what I just said? We're going to look at this blue little line here. If it's above the blue line, we're going to buy it when it hits the 200-day. And then 100 days later, you should be in the profit. Okay? If that line is angled down, it's considered a bearish stock. These are for your investors. For you traders that we look for stuff, we're gonna look at the Ichimoku. If it's above this Ichimoku, it's probably gonna run 7 to 10 days. If it's below this yellow line, it's probably gonna run 7 to 10 days to the downside. What are we experiencing right now? So I'm gonna show you guys a magic show. And when you watch this, you're gonna say, God dang it, trading and investing actually is easy. When you learn from somebody who's made money from the market. All right. So what's the rule for this? If it's above this yellow line, 7 to 10 days to the upside. If it's below that yellow line, 7 to 10 days to the downside. If that yellow line is angled down, we ain't gonna buy it. If that yellow line is angled up, we might buy it. And it's probably gonna run for 7 to 10 days. All right. I did a consultation today and, a couple of consultations today, and traders, for some odd reason, think that when stocks start to run, they only run for 1 day. And I'm like, who do you hear that from? Like, that's not how the stock market works. Like, when a stock starts to have momentum to the upside, it's probably going to run 7 to 10 days. Then it's going to take a break, 7 to 10 days. Then it's going to go up 7 to 10 days. Then I'm going to make a dance off of this. Then it's going to take a break for 7 to 10 days. Who are you learning from? So if you looked at this chart here, you're going to see that the spiders ran, then it gets below the yellow line, and then it runs to the downside. Then when it goes up here, it's going to run. And then when it goes underneath the yellow line, it's going to run to the downside. Why are you guys buying things to the upside when you see this? Now Jolie Joel and told y'all that the market's probably going to run 7 to 10 days to the upside. then 7 to 10 days to the downside. So when it crossed here on Friday, it ain't been 7 days. All right. Friday, Saturday, Sunday, if you want to count that, Monday. Now it looks like it might want to go up in price, but why are you guys trying to time the market when all you had to do was see where you're located? What would Joel do in this situation? Well, Joel says when it's underneath this yellow line, the probability is probably that it's going to go down 7 to 10 days. So all I had to do was draw this one little basic little line that y'all will not teach yourselves how to draw. And then if it breaks that line, the first area it might go to maybe is that yellow line, right? And that's still a nice little move. But even if it gets above here, you still got a lot of room where it may go back to its highs. But I'm not gonna buy this if I see a whole bunch of red candles. But that's what y'all do because somebody didn't taught y'all how to buy low, sell high, buy low, sell high. Isn't that what you do, Joel? When you're trading, you buy low and you sell high, and then y'all losing. No, you should have been going in this direction as a trader. And now you should be getting out of a win to the downside. You should be doing the opposite of what you're taught. Whatever your teacher has taught you, do the opposite. You listen and say, all right, you telling me to do this, I'm actually going to go the opposite route that you're doing because that makes no sense. As an investor with the S&P 500, where is Joel waiting to buy? Well, if I notice here that every time it hits the 200-day moving average, it's a buying opportunity. That was, I know y'all think this was last week. That's 2018. It hit it here. It hit it here. It hit it here. It hit it here. That's the March lows. Then it hit it here. And then y'all ain't seen the 200-day moving average since. So it looks like it just wants to come back to this little line here. Y'all know the little sell-off that we had today? It ain't really nothing in compared to what the market has already done for the last 18 months. You're like, y'all crying over this. Y'all crying over this because it feels like it did this. The market ain't even close to doing what it did during COVID. These are sell-offs that happen. Y'all see these little dips? How many times did y'all see this same little move right here? Let's count. 1, 2, 3, 4, 5, 6, 7, 8, 9. It happened 10 times. And now y'all want to get, you want to be frightened by the market? You know why? Because you're in some room and there's some emotional person in the room telling you that the world's coming to an end. Or you just went and watched The Big Short and now the world's coming to an end. And I'm like, guys, how can the world come to an end when the government just said they printing $5 trillion? The government just said 2 weeks ago, we just approved of going to our printing machines to print $5 trillion. And y'all getting out the market because you're learning from thousandaires. That's why. All right. And I say it like that because it's the truth. It's the truth. All right. So what should you be doing? You should be watching this. All right. The market sells off. Listen to what I said. The market sells off 5 to 10% every single solitary year, multiple times. Don't believe me. Don't believe the hype. Go and do it on your own. You could take this little, watch this. I'm going to take this little thing here. It's going to tell me how low from the highs to the lows. When the market first dropped to here, we dropped 5%. Now the market drops 5 to 10% every single solitary year. Did y'all know that Bitcoin drops 50% every single solitary year? Did y'all know that Apple and Microsoft and Google and Facebook all drop 15 to 20% every single solitary year? Y'all know that Tesla drops 50% every single solitary year? You can go look at the beta until these things are happening, right? You should know these numbers. Right? These are like solid numbers. And like in the real estate game, when I bought real estate, I would never buy real estate unless it was 20% off. And the sweet spot was trying to buy something that was 35 to 50% off, because if I had to do work to it, I can still renovate it. And then, the margin or the difference is where I was going to make my money. So in the stock market, everybody, if they're looking for an investment, you should already have a number in your head, like 10 or 20 or 30% that you buy these stocks off. If you're investing, right? If I'm going to invest in this, I want to get it 20 to 30% off so I can make money in the future. Or if I'm looking for good deals on high beta stocks like a Square, a PayPal, or a Google, I know they drop 20 to 30% every year. So you should be setting up alerts to let you know when those stocks are on sale, because stocks ain't nothing but real estate. That's why this game is so easy for me, because Apple and Google and Amazon, they're real estate. They're real companies that's making money, and they're getting investor funding from us. That's just real. So you're really investing in real estate. And as that real estate grows, you grow with that real estate. All right. Including the real estate that you already own. All right. So we dropped here. So the last time we dropped about this low was December the 3rd. So I'm going to put a bracket here. And then I'm also going to set an alert. Y'all see how I'm doing my homework? I do these videos so I can do my own homework too. Like this alert that I'm setting right now, I'll get an alert. I'll be able to send it to you guys. So if we get to this level, it'll be at a support area. The next support area is going to be this 200-day moving average. If you guys got to learn how to work backwards. Now, if Joel says that the market usually sells off 5 to 10% a year, is it out of the ordinary for it to get to this 200-day? Well, let's check. The highs to the lows, and I'm going to make that bigger so that you guys can see it for you guys watching it on your phone. If we go to the highs, and this is the S&P. Why am I using the S&P? Because this is what traders and investors agree on as the comp. This is what we compare the whole market to. Like every trader, every investor that knows anything, we all have a understanding that the S&P 500 is what everybody's going to look at. And we also have a understanding that the 200-day moving average, these are universal, basic, fundamental tools that will allow every single trader and investor, to understand different areas of the market. So if you don't know what a 200-day moving average is, right? If you don't know what the S&P 500 is, then you guys got to go back to the basics. All right? Because you're going to struggle in the market, but this is what we look for. When it drops to the 200-day moving average, that's about an 8% drop. Now, the market drops 5 to 10% every year. You add a little bit of volatility, it can drop as far as 20%. So that's not out of the question. And even if it happens, it's not going to be scary for me, because I've seen the market drop 10%. The last time we had a big drop like that was in September. September, guys, we dropped 6%. Y'all remember how awful it felt? Y'all know that was the biggest drop that we had, I think, in the last 18 months. This move right here. Now, we normally drop 5 to 10%. So we've been extremely bullish. A lot of you newbies that are in the market right now, you're experiencing something that normally never happens. And you got to be able to understand when that actually happens. All right. That's your job. That's what we're learning. That's why I'm giving you guys this free stuff, because when you guys, I know money is like energy, is neither created nor destroyed. It's just transferred from one entity to another. And a lot of you guys have been transferring your money into my account. I know in order for me to make money, I got to take it from you guys. But if you guys get on the right side of the trade or right side of the investments, you guys can start being on the winning side, because 10% of the world owns 90% of it. And I'm a 1 to 10%er. Okay. As far as, where I'm at financially and how I trade, right? So if you want to get on the 1 to 10% side, you got to understand how we think. So if the market's going to drop, 10 to 20%, I got to start setting myself up for that. But that's the long-term way of thinking. So let's look at some of you guys' stocks, because my goal was to kind of teach you guys the fundamentals, because what's going to happen is consistently when I pull up your stocks, I'm not going to have time to teach what I just taught in the beginning. You guys got to understand, above the 200-day is bullish. It hits the 200-day, you buy it. 100 days later, you should be able to make money. All right, I can charge you guys right now $10,000 just for that information. And some people have the nerve to do it, and they don't even teach that. Right? So, I want you guys to take this information, write this stuff down, but I don't want you to just trust what I say. I want you guys to start doing this on your own. That's my whole goal. My whole goal is that I can have conversations with other people about the market, because I don't like that. I don't like being at parties and everybody's talking about stocks incorrectly. It's not fun for me, because then I go into education mode. I want to be able to talk to people and they know the different areas to buy these stocks on sale. They know what stocks have momentum. They know that these particular cryptos are this particular market cap and they can run to a different market cap. And that's not what I'm saying. So my goal is to try to encourage and teach all the people that are around me, or that I have, that I can touch, so that we can see the market, so that when you pull on when you pull up CNBC and Bloomberg, everything makes sense. Because what they're talking about on TV, guys, is not that hard to understand. I know it sounds like a different language, but it really isn't. They're just talking about how big the company is and how much it can grow. The problem is they're not pulling up charts like this and showing you guys different entry points. And that's where I'm here to help. So let's get to some of your stocks. Let's look at Roblox. So Roblox, if you believe in the metaverse, Roblox is that stock. All right. So Roblox, guys, Roblox is a company, and I learned about the metaverse by owning a Oculus device. So Oculus is the number one virtual reality headset that's out there, and most people don't know that Facebook owns Oculus. So my very first experience in the metaverse was through this game that I played, and I had no idea that when I was playing that game, I was in this weightless environment, and I was at this computer, and I'm like walking around the room, and I feel my headset like vibrate, and I look to my right, and there's an individual right there talking to me. And I thought that it was some robot that was in the game. Come to find out, it was a real person, and I threw my headset off because I couldn't believe it. So then once I got over the fear of, I don't have any issues with meeting people in the outside world, but for some odd reason, I get really, really scared when I meet people in the metaverse, because I don't know who you are. You could be a 5-year-old, you could be a 55-year-old, right? I don't know, because of your avatar. But that was my first experience with the metaverse. And it was kind of weird, but it was also, I kind of understand how it works. I was over at I was over at one of my good friend Enrique's house this past week. And I was, when I went to go pick him up, his nieces were actually playing Roblox. And it's interesting how these 9 and 10-year-olds can think of building the metaverse like, I don't know if anybody has kids and they've been on Minecraft, but it's like Minecraft on steroids. And they're building all of this real estate. They're building their own cars. They're going to like these Home Depots and looking up different colors of things to buy, and they earn money a certain way, and then they're able to buy those products, take it to their houses, and build their real estate. Like, it's very interesting. And in the metaverse, people are actually buying like real estate. Like, there's people buying $1 million pieces of real estate in the metaverse and flipping it. So it's a whole new world that's going to take you to a whole nother world. But Roblox is at the center of all of that. So Roblox just IPO'd. The date that they IPO'd was on March the 10th. And March the 10th, IPO is just an initial public offering. They were able to they were a private company, and now you can invest in their company. So when they IPO'd, their stock price was right around $60. So $60 is your support area, right? Never dropped to that price but one time. So this is a double bottom. This is great for investing, not great for trading. All right. So it hit the support area, hit another support area, and it started to run. Okay. If I was trading it, I'll make money there until it starts to go down because stocks are going to stair step. They're going to stair step, right? They're not going to go up in a straight line. It feels like they go up in a straight line. And this is where you guys lose money because you don't realize that it might go up for 7 to 10, 7 to 10 days, up 7 to 10 days, down, then up, then down 7 to 10 days, then up 7 to 10 days, then down 7 to 10 days, then up 7 to 10 days, then down 7 to 10 days, then up, then down, then a nice little push up, then down, and then up, right? So on its trek to $141, it wasn't easy. It was easy as an investment. Why? Because you just bought it. It went up in price. The smart people, when it dropped in price, they didn't sell it. Because as an investor, if I'm putting $1,000 into it every single month, why am I getting out down here if I'm expecting it to go here? Anything under here is on sale. And I see y'all do this all the time. Y'all sell your investments because it starts to go down. Think of it like real estate. If I bought a $200,000 house and then the next house across the street from it goes for $100,000, aren't I going to buy that $100,000 house? It's on sale. Y'all don't think like that. You're like, no, I'm going to sell the one I'm in now and I'm not going to buy that one because something's wrong. Nothing's wrong. It's just that things go up and down on their way up to this price. All right. You're trying to trade with an investing strategy. So when it was going up in price, the traders should have gotten out when it started to go red, maybe even shorted. Right? And you would have done well until the trend starts to go back up. This is investing. Like if I bought it here and then it goes here and then it drops, let's see what percent. If it drops from here to here and it drops 25%, it's on sale. 25% on a stock that you love. That's why so many people bought it in this little area here as an investment. Because anytime you can get a stock like this 25% off, you're going to get some support. And it wouldn't drop lower than 75 because everybody knew that it was on sale because it had already printed $100. That was the comp. Once $100 printed, and when I say print, that means the stock actually went to $100. You have a 90% chance that the stock will go back to its all-time highs. I don't know if you guys understand that number, but that's a real number. If a stock goes on sale 25% or 30%, you literally got 30% equity because you got a 90% chance that one day it's going to go back to its all-time highs. So as an investor, don't you want to buy things on sale with equity in it? You do it with real estate. Why aren't you doing it with stock? And then if something drops in value, 60 or 70 or 80%, when it goes back to its all-time highs, you make even more money than you did to the downside if you use the same amount of money and you invest in that particular stock. And everybody knew that when this dropped 25%, watch this. When that dropped 25% from here to here, if it went back to its all-time highs, y'all see how you're up now 33%? I know you guys are like, hold up, that don't even make sense, Joel. It does. When this dropped 25, so you can see it with your own eyes. Y'all see that? That's 25. Says it right here. That's 25. But watch this. Same move, same place. Now it's 33. Because you make more money to the upside when things go down in price as an investor. As an investor. You traders are like, but look, Joel, if you bought it here, you would have made money. Yeah, but you guys are buying 7 and 10 day options. So why would I buy a 7 to 10 day option on something that's probably going to drop 7 to 10 days? That's why y'all are losing money. Once this started to go up in value, look, you had 1, 2, 3 days. You thought the trade was over. Here's the fourth day, the fifth day, then the sixth day. You had 3 more days to make money. There's your 7 to 10 day move in the options market. Okay. Then once this trend broke, let's count how many days it went down. Once this trend went down for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Because stocks go up for 7 to 10 days, down 7 to 10 days. I know your teacher never taught you that, huh? Experience is a real thing. When you experience taking money to a certain amount, you don't teach the same way. I don't teach the same way that when I first started to learn how to trade and invest, I'm totally different. I see the market totally different because at that time I was inexperienced. I didn't have anybody teach me the market. I didn't know how to look at it. I just tried to use my common sense and the fact that I was smart and had a high IQ. But that made me lose money. The smarter that you are, the probably the more money that you're going to lose. So I had to experience the market. Then once I experienced the market, I was like, oh man, it ain't nothing like what I hear in all of these YouTube videos. It's actually almost the opposite, right? And then once I started to understand that, I said, you know what? I've got a little bit of money in my pocket. I don't really want to teach anybody something until I can actually show them to some results. That's just that's just how I am. I'm not gonna just say I'm Joel Harrison. So because I've been winning my whole life as a swimmer, I'm now a great teacher in stocks, right? And there's a lot of people that are like that. Like, hey, I'm smart, so I'm going to teach you. How about you guys put in the work, make the money? I promise y'all, if you make the money, you're not going to teach the same. You're just not. And I can tell by watching how certain people teach that they haven't actually learned the market. And some people that have very big megaphones they're just, I just see so much of it. That's why I rant and I rave about it a lot. It's not so that you can take my classes. I'm doing this for free, right? It's so that you guys can truly see what the market is doing and how to actually make that money, and that making money and making high returns is not that hard to do. You just got to know what to do. So once everybody bought this 25% off, how high do y'all think this actually went? Let's say you bought it way down there and then it started to jump. If you get on here early, we get to look at your stock a lot longer. If you get on late, I might only spend a little bit of time. Guys, if you had bought this stock when it was 25% off and you let it run, you would have ended up getting 100% return. 100% return just by buying something 25% off, holding it till it got to the 30% area, and then lucked up and got a nice little run to the upside. Sometimes if you put yourself in a position to get lucky, you get lucky. I couldn't have called this. I could have called that it was going back to its highs. Nobody saw 140. Okay. And now, if you make 100% return, what do people mostly do when you start making money like that? You're going to take profits. Most of you guys were giving yourself 2, 3 years for you to get 100% return. Some people got it in 14 days. That was a 14-day trade that ran 100% in a stock that started to run when Facebook decided to change its name to Meta. And if you had jumped on the train, this was not the first day. Y'all see that? The first day that it popped, it came down. Remember the what would Joel do method? 1, 2, Joel gets in. Joel would have got in here knowing that I probably had 7 to 10 days to make money. Let's count. 1, 2, 3, 4, 5, 6, 7, 8. And then it started to sell off. Did I know that somebody was going to put roadblocks in here? No. Joel, how did you know 7 to 10 days? Because I trade for real, for real. All right. And I want you guys to start understanding that as well. All right, let's look at some other stocks. It's going down right now. Anybody thinking about trading this is to the downside. If I wanted to look at this on a real basis, 7 to 10 days, Roblox started to go underneath this yellow line. What did I say about that yellow line? I said when it goes underneath that yellow line, Joel said when it goes underneath the yellow line, he keeps it simple. He don't turn on no TV. He don't listen to nobody talk crazy because most of the time it's thousandaires talking, and thousandaires don't know what the heck they talking about. But Joel's a millionaire. And this fool said when it jumps underneath this yellow line, if he sees it go red, probably gonna go down for 7 to 10 days. So when it goes down and you start counting 1 day, 2 days, 3 days, 4, 5 days, 6 days, 7 days, maybe some more. I knew that it can drop 7 to 10 days. Why didn't you know that? Stocks don't just run one way one time. Now here's the thing. Let's say you looked up and Roblox was up 30% in one day. Then it's probably not going to run for 7 to 10 days. All right. When you see a big push like that, people are going to take profits. If it doesn't go back to the lows and it pops back above this yellow line, you might have a chance for 7 to 10 days. That's the only time that you guys are like, I'm late to the party. But if the average move of Roblox is, let's look at the average true range. A lot of you guys don't know about this either. Lord, let's say I wanted to pull up Roblox. Is Roblox on my list? Oh man, it's not there. Let's add it now. Roblox. Roblox average move on a daily basis is $10. All right. So with it being $10 move, if it goes up, if it's up $10 or $12 on a big move, guys, that's an average move. That means it can move $10 every day for 7 to 10 days. But if you look up and Roblox is up $50, that's unusual. That's when you say, nah, man, I'm late to the party. But you're not late to the party if it's up $5 or $6 because it runs $10 on average every single day. Now, that doesn't mean that it's going to run up $10. It just means that the range is $10. It looks like it's been ranging to the downside $10 every single day. All right. So if it opens at 120, it's probably closing at 110. Right? If it opens at 110, probably going to 100. You know, if it opens at 94 and you think it can go up in value, probably going to 104. Y'all see how I'm doing this? Y'all see how I'm doing this and making it so simple and so easy? I want you guys to start doing the same thing. All right, let's look at the next stock, which is Apple. So let's pull up Apple. Good old Apple. Let's see if Apple is bullish or bearish. When you pull up Apple on the 200-day moving average, you're going to notice that every single time Apple hits the 200-day, 100 days later, you're going to make money. You don't believe me? Let's count how many times Apple made you some money. All right, we're going to count. And then I want you guys to get pissed off when you see this because it was the easiest money you could have made. Now, we're going all the way back to 2016, not 16 days ago. We going back to 2016, which was 5 years ago, before COVID, before we impeached Trump. We going way back. Apple hit the 200-day there. It made you money. It made you money here. That was 2. It made you money here. That's 3, 4, 5. This was a big nasty one right here. All right, that was nasty. All right. So yeah, you might have lost a little bit of money if you were trading, unless you did the what would Joe do method, waited for the trend to go up, you would have made money. But I ain't trying to count all that. But if you bought it here as an investment, you still bought it and it still ended up going higher. And after this bad little period here, this was 2018 when we were impeaching Trump. We didn't know if he was going to be out of here or not, so people started selling. We came back. We realized he wasn't going nowhere. It came back down, tested the 200-day again. So let's count it again. We'll count that as a loss. It won 1, 2, 3, 4, 5. Then it lost. Then it started to win again. 6, 7, 8, 9, 10. So what? We got 10 wins, 1 loss. What's that? 90%. That same number that I've been telling y'all about. So as an investment, y'all should have known when to buy Apple. Everybody and their mama knows when to buy Apple. Actually, everybody and their mama knows when to buy every stock when it hits the 200-day moving average, especially if that average is angled up, because it lets you know that hedge funds, pension funds are pouring money into that particular stock. As a trade, should you be trading Apple up or down? So this is what you should ask yourself before we even look at the charts. Joe done said stocks move 7 to 10 days up, and then 7 to 10 days down. 7 to 10 days up, 7 to 10 days down, 7 to 10 days up, 7 to 10 days down. Are we in the 7 to 10 day period to the downside or 7 to 10 days to the upside? You traders that think y'all can trade, you're making it hard for yourself. You got to go with momentum when you trade. Investing, we look for support areas. Terrible trading strategy. Terrible, terrible. Because momentum stocks go from the left side of the screen to the upper right. They don't go sideways. And they sure as heck don't go down. Woo, I'll be wanting to wring y'all's necks. So, what has it been doing for the last 7 to 10 days? Well, you got to use an hour chart for that. If you notice, when we pull up Apple, when it got above this yellow line right here, we ran for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. 10 days, 10 solid days. Apple ran up 7 to 10 days. It's not going to run for 100 days, people. Stocks run 7 to 10 days, down 7 to 10 days, up 7 to 10 days, down 7 to 10 days. All right. Can you get in something late? Yeah. As long as Apple is just going up 2%, 3%, it's grinding up. Those are the best trades. The terrible trades is when it goes up 14, 15% in one day. If you're in Apple and you look up and that bad boy is up 15%, take your profits. It's probably about to go down because that's not normal. And any smart trader is going to take their money, because Apple don't go up 15%. It might have only gone up 15% one time in 10 years. And all of us, we're in a room giving each other high fives on all the profits we got. And then it's always that one trader that's like, man, I got to make back all the money I done lost for the last 3 weeks. So I'm just going to hold this bad boy overnight and see what's going to happen. And I just shake my head. Rookie. So we got underneath the yellow line. What does that mean? What does Joe teach in every single solitary class? 7 to 10 days. 7 to 10 days. I don't care how long you've been studying all night on that stock. If the billionaires and the millionaires ain't buying it, your little $1,000 ain't gonna make the market turn around. It just ain't. And you guys got to understand that. All right. So when it broke below here and it started to go flat, and we got red candles and we got 3, you should have said, uh-oh, spaghetti-o. Maybe today ain't the day to buy Apple as a trade. It's probably going to go down 7 to 10 days. I know we got the Christmas rally, but it's probably going to go down 7 to 10 days. When it did that on Thursday, Friday, Monday, Tuesday is 4 days. Maybe 1 or 2 more days. Maybe it'll be over with, and maybe on Friday, maybe we'll get a rally next week. That's how I'm thinking. This week looks terrible. But stocks don't go down for like 3-4 weeks like y'all think they do. They don't. When people want to sell, they sell. They don't sell for the pain of selling is fast. Buying actually takes a lot more pain than it is for selling. When people feel that pain to sell, they just sell it all. It don't last 3-4 weeks. The selling side is actually a lot faster than it is to the upside. And you want to find those vicious sell-offs that's like 7 to 10 days. And then if you see it break a trend and start to go back up, then you might want to take a shot at it. But quit trying to catch a falling knife. Now that looks okay. So anybody that started to pick up some Apple towards the end of the day, I can see why you did it. You broke this little trend that was going down. It's been 4 days. Makes a lot of sense as a trade. So then I want to go and look at the options. This is going to confuse a lot of you guys. Sorry. Let me take Apple off the screen so that you can see what's going on. I want to look for unusual options activity. What I'm showing you guys right now is like this isn't illegal. It's a legal way of seeing unusual stuff happening. Like when traders do a lot of stuff that is illegal, this is where they're going to do it first. And I can come in here and see where they're buying. Let's say you had a stock tip and you knew that Apple was going to have, let's say you had an illegal stock tip, which you shouldn't have, right? And you don't realize the SEC is going to be following you, and you don't want to buy it in the stock market because you know, if you buy a whole bunch of shares, you can move the market. The first place they're going to run to is the options market to try to, not be seen. And then they're going to buy up a whole bunch of shares or contracts at a certain strike because you're controlling 100 shares. This is where people get wealthy and rich. We call that unusual options activity. So when the big hedge funds and pension funds start setting up legally, because you got legal and illegal stuff going on. I don't want to say that all of this is illegal because it's not. Maybe 0.00001%. I don't want to get in trouble. So we're just going to assume all of this is legal. I want to go and see where everybody's buying because the stock market moves based off of orders. It doesn't go off of your emotion. It goes off of orders. If there's a lot of orders placed at a certain strike price or a certain area, the computers are going to move that stock up to that price. That's just it, like everybody knows this. So if a whole bunch of orders are being placed, pulling the market up to the 170 strike, then you have a high chance of making money, especially if you don't see people betting on it going down. So we call that your call to put ratio. So if I look at the Friday options and I see 150,000 being bought, but I don't see 150 over here, I see like 50 as the most. So this is a 1-to-3 ratio. You got a high chance that 170 strike was going to hit. Okay. And a lot of people placed that order earlier today to try to make some money. Now, some people are like, Joel, money is not supposed to be made fast. If it was that fast, then why isn't everybody doing it? Because 10% of the world owns 90% of it. You got to understand that's a real number. So let's look at that option. Okay. That option at the 170 strike. If you want to see how much money you could have made on this option, early this morning, these options we hit the 170 mark right around, I think, 12 o'clock. We also hit it real early, right around 9:50. If you were able to buy some of those options at 9:30, and I don't teach to just buy it at 9:30, I'm just going off of how much those options are. On a day where the market looked like this, which means Apple was probably going to struggle to the upside. Even if you were wrong and you were going against the stream, which that's how most of you guys trade, even if you were going against the stream, you still could have bought Apple at $240. Most of us have 240 bucks. Could have bought Apple at the open. And that option went as high as $318. Now, that's not really breaking the bank, but if you had $246, you could have made $70. It doesn't seem like it's a lot, but when you look at the percentage of how much you could have made, you're going to notice that was a 30% return. Hold up, Joel. I could have made a 30% return today in 20 minutes trading Apple, the largest company on the planet, and I was wrong with the direction. I'm like, yeah, you could have been wrong today, didn't know what the heck you were doing, going against the stream like most of you guys do, and you could have still been up 30% and you were wrong with the way I would probably assess the market. Because if I was assessing the market, I probably would have shorted something like Apple this morning, right? Because Apple had a 7 to 10 day move to the downside. You looked up and you saw that the market looked like this. So I probably would have been trying to trade Apple to the downside. All right. And I mean, it dropped and then it came back up. Right. So it made you a 30% return and that 30% went away. Then the market went, then Apple went sideways, which is what it was supposed to do because this is what was happening. There was fundamental selling happening in Apple. When you get fundamental selling like this, you got to understand that you don't move the market. You ain't got those types of funds. You a thousandaire. You can't move the market. You got to look and watch what the millionaires and billionaires are doing and then attach yourself to what they're doing. And if they're panicking, you make money off of them panicking. As an investment, yes, you want to buy things, you want to buy low, sell high. But as a trader, it's the most terrible way to approach the market, in my opinion. And I argue with other traders all the time. And then I just say, you know what? I get tired of trading. I argue. I'm like, all right, show me what you've done. Fine, fine. You can trade against the market trends. Show me what you've done. And then the argument ceases every single time because there are people that think that they know because they're smart, but they don't have nothing to show it. If a counter trender can show me consistently that they can go against the market every day, I will shut the hell up. But it ain't happened in 10 years. Joe, you just arrogant. I'm arrogant because I put in the time for 10 years, right? Everything that we're talking about consistently, you're going to be able to take this. I don't change anything up because these are the fundamental ways of looking at price action. Okay. What you're doing now is you're learning price action. When you learn price action, it makes trading way easier. All right. So let's get to your stocks. I don't see too many. Let's look at Ford. Okay. I love Ford. Joel, I ain't buying Ford. It stands for fix or replace daily. Found on the road dead. I ain't buying that stock. I'm buying Tesla. Great. I get it. You might not want to invest in Ford. There's stocks that I don't like. I don't buy oil companies. Like you never gonna see Joel buying an oil company. I understand your biases. I'll trade it. So let's talk out Ford, right? What is Ford doing before we even pull up the chart? 200-day should be angled up. Now, I had a partner of mine way back here, kept telling me I didn't know what the heck I was talking about Ford. And I was like, look, bruh, I know I ain't got no classes out yet. I'm still trying to wait until I am legitimate enough to be able to teach. But I don't think you should be buying Ford because I've been studying this 200-day moving average. And I know that all the billionaires and millionaires are using this. And what I see, bruh, is that the 200-day moving average is angled down. He also wanted to buy, another partner of mine wanted to buy oil. And I was like, guys, these companies, the 200-day is angled down. You should probably stay away from them until that 200-day moving average starts to turn up. Now, 2015, 14, I started telling them this. They didn't want to get out. 2015 came. Now they still buying it. They buying it from 16 to 14 to 13 to 12. We done gone from 2014, 2015, 2016, 2017, 2018. 2019, Ford was going down for 5 years. But because they were smart, and because they were like, it doesn't make any sense, Joel, the F-150 is the best-selling vehicle on the planet. I'm like, yeah, but the company is not the stock, and the stock is not the company. I learned that from listening to Bezos, who is a billionaire. It doesn't matter. If investors are not investing in that company, it ain't going up, period. They move the market, not you. Nah, bro, it's going to turn around. All right. They finally decided to get out in 2018. For 4 years, they wouldn't listen to me. And you know what? They shouldn't have listened to me because I hadn't become a millionaire yet. I'm not claiming that everybody should have listened to me 6, 7 years ago. You shouldn't have listened to me. I didn't have no receipts to prove that I was worthy of educating y'all. I didn't. That's why I kept quiet and I kept my ego to myself. And I studied and I learned and I wanted to see if this stuff consistently is happening. And then everybody knew that Ford and oil was my most hated. I hated Ford more than any stock on this planet. And then all of a sudden, I had a love fest with it right here. Nobody understood why. Most people thought that I was just jumping on the bandwagon because they don't know about my story. They don't know about my friend who comes out in the room every day and says, Joel, I've never seen somebody be so right about a company off of the technicals and the fundamentals that you taught me over the years. And he has a high respect for me now because I went from being a total bear to loving Ford. Now, why did I start loving Ford? Is it because I just decided to jump on the bandwagon with everybody else? Nah, because there was a lot of times Ford looked like it wanted to go up. It looked like it wanted to go up here. It looked like it wanted to go up here. It looked like it wanted to go up here. Why here? Because I waited until I saw this 200-day angled up because I know how billionaires and millionaires think. And then when I went into the options market, doing a consultations with one of my buddies. One of my buddies now was a client before that. We noticed that there was super duper unusual options activity, like over 400,000 open interest contracts 8 or 9 months later. I think it was like August. When was it? It was like July, August, September, October. And we saw a whole bunch of options for December all the way out to February, March. And we saw the $10 strike being bought. So we started buying it right around this $7 range. Now I'm up, almost 200% on a very easy trade. I asked everybody to take the ride with me. I was like, guys, I called these stocks like almost to a T, right? So we were able to ride Ford up. But why were we buying Ford? Because psychologically, what was happening? The 200-day started to angle up. That's what pension funds and mutual funds want to see. They want to see this. It got above it. They had a catalyst to push the stock up in price because Tesla ran and became the largest company on the planet, the largest car company on the planet. Surpassing Ford, General Motors became a $1 trillion company, or it was on its way to $1 trillion. So as long as they changed their model to doing electric cars, investors said, oh, okay, you talking my language now. The millionaires and billionaires who made all their money on Tesla was like, finally, Ford, you're talking the language that we want to hear. You're finally saying the key words that everybody's looking for, even though we know those products aren't on the road yet. But because you've been around for 100 years, we know that you're going to be able to deliver. So yes, now our fund will start investing in your company. And then when that started to happen, it was an easy move to the upside. I'll probably never own a Ford, except maybe if the Raptor becomes a electric vehicle, I might consider it. I love the Raptor, right? But it's gonna have to at least have the same numbers as the Cybertruck. And if the F-150 electric Y'all know the F-150 electrics numbers aren't even close to what Tesla numbers are. The closest thing to Tesla's numbers is the Hummer EV and Rivian, right? So Ford's gonna have to pack some more punch as far as how fast it can go and how much power it has. But we sitting at, we hit an all-time high, what, 2119? We hit an all-time high, 5 days ago. So when it hit that all-time high, how long did it take to get there? Well, it ran 1, 2, 3, 4, 5 days. Then it sold off 1, 2, 3, 4, 5, about 6 days. That's what stocks do. But is this a buying opportunity? I don't know. Would I buy Ford right here? Well, Ford drops 10 to 20% a year. Ford is now at the lows of today. Ford was down 11%. Ford drops 20% every year. So I think you can get a nice little move to the downside, but it's probably going to go here, here. It's probably going to go here, here, here. Probably going to pop again and then maybe go lower. So what I would be thinking about buying Ford as an investment would be here. If I was trading Ford, I would not be trading Ford to the upside. I would probably be trading Ford to the downside, at least to this support area. All right, because the hour chart, let's see, the 7-day run started right on Friday. We only 2 days into a average of a 7 to 10 day run to the downside. And it never broke this trend. Never broke this trend to the downside. It looks like it wants to do something. Let's see what happens tomorrow. Maybe tomorrow, if we're here, if it goes up, fills that gap, maybe you can take a shot there to the upside, for a short-term trade, but you're still going against the trend. I love this. See, I know you guys want to get in here or get in here, but why when you can get in here? Look, you can use the what would Joe do method. And when it went up once and it went down, and then it started to go back up, that's when I like to get in. 1, 2, Joe gets in. 1, 2, Joe gets in, stops right there. 1, 2, Joe gets in, stops right there. You could have made all that money immediately. Like, why do I want to sit through all this pain of 2 days, can't sleep, and it starts to run right there, right? And look, you could have got in 5 days late, Monday, Tuesday, Wednesday, Thursday, Friday. That was five, it went sideways and then it started to push up in price. And then that nice little spike was the last day out of this 7-day run. Monday, Tuesday, Wednesday, Thursday, Friday, that's 5, 6. After 6 or 7 days, it's going to start going down. We want to make this easy, guys. We want to make this easy. So do I see any unusual options activity now? If I was trading forward to the end of the week, I see 20,000 contracts here. I see about 13 here. So I like to see like a 1-to-4, 1-to-5 ratio. I want to see 3,000 over here and then, 20,000 over here. I don't really see that. I see 20 and 13. That's too close, in my opinion. I don't need to trade that. I want to see it very unusual. If I was investing in it and I was going way out to March or April, I want to see unusual options activity like this 1,000 here at the 20 strike. $200, I'll take that option. It just has to be higher than, 21.95. It's got to be higher than 21.95 by April. I might take that trade if this was down 20% or it was sitting at the 200-day moving average. But we ain't even close to the 200-day. We're close to the 50. And the 50-day moving average, and where this is about to touch, is probably where it wants to go. It wants to settle down before other investors start investing in it again, or traders start to get in again. And then I always set up a alert down here as well. All right. Let me look at the next stock. Apple, Ford. Let's look at Nike. Good old Nike. Did you guys know that Nike just bought I think Nike just put out their what's it called when you get a they just trademark their their brand in the metaverse. Isn't that crazy, right? The largest retail company for shoes is buying things in the metaverse. They believe in it. Like imagine being in the metaverse with your friends at a party. Now, I imagine that they're probably going to let you come into the metaverse with just a regular blank shirt and maybe some pants. It might be like some basic stuff you can get at the at the dollar store, right? But in the metaverse, let's say you want to be kind of as fly as you are in the real world, right? Well, what if nobody can afford Nikes except for people that really, really have money in the metaverse? And then you're at some party and you notice there's a couple of avatars and they got Nikes on, and then you notice that the Nikes that they got on cost $3,000 because you looked at the NFT the day before. You might say to yourself, yo, that person might be somebody, but they spent a little bit of money to just have that shoe in the metaverse, at that particular concert. This is the type of lifestyle we're about to see in the future, which is going to revolutionize the way that we even interact with each other. It's kind of scary and fun at the same time. But if I was looking at Nike, what does Nike look like it wants to do? Nike looks like it wants to go to this 200-day moving average. So let's look at the 200-day. How many times did Nike make you money at the 200-day? When did Nike start turning up? When did the turn up start happening? The turn up started happening right here in 2017. 2017, Nike started to go bullish. And every time it gets above here, literally every time we touch the 200-day, you go 100 days out, you probably are going to be up in price. That's one time it won. All right. Same thing here. Sat there for a second, then it started to run. Here's number 3. Here's number 4. Ooh, this was a vicious move. Why? Because that's the COVID lows. But we bounced back. This was nothing but a super duper buying opportunity. You could have capitalized on everybody being fearful. You could have made money there. You could have made money here, here, and here. And look at this. Perfect. Here. Y'all think this blue line just showed up out of nowhere? Nah. The billionaires knew where it was. The millionaires knew where it was. The thousandaires never heard of it because they learning from teachers that are thousandaires. I'm going to keep saying it until y'all start asking your teachers, what have you bought? What have you done for me lately? Watch them start stuttering. Oh, I don't show my stuff because it's not professional to do it. Like every money manager shows their stuff. Everybody shows their performance, but then all of a sudden, these YouTubers can keep their stuff to themselves. My lawyer said I shouldn't reveal. Y'all on that Trump game. I don't release, the records of how much I made. You just have to trust me. There's a gap right here. So Nike literally won every single time it hit the 200-day from 2016 for 5 years. But y'all losing money. I don't get it. I don't get it. So we're approaching the 200-day for the umpteenth time. Well, Joel, this is it. This is the time that we ain't gonna hit the 200-day and go back up. Why? The government just said they printing $5 trillion. Where y'all think the money going into? Well, Joel, that money is going into the infrastructure. Well, aren't there infrastructure stocks? You don't think they gonna get some of that money? Right? They gonna get it. Every single time we've had a bailout. It happens twice so far. When Obama, back in 2008, we got that bailout from, just the bailout, the $800 billion bailout. That was the beginning of this bull run. Y'all know that this bull run happened. It started when Obama came in office and got that $800 billion bailout. That $800 billion bailout pushed us to where we at right now. And that was just $800 billion. They're now talking about printing 5 trillion. 800 billion brought us to where we at right now. What the heck y'all think 5 trillion can do for us? It's an injection of money, right? They artificially inflate the market. And then the rich get rich, or what I call the 1 in 10 percenters, we get rich and everybody else just watches while we make money. Easy, by buying it at the 200-day moving average. All right? Making money in this game is dumb easy. Y'all make it hard for yourselves. So I don't want you to run out and buy it just because we hit the 200-day right here. Got to give yourself like 100 to 200 days for it to go up as an investment. If you're trading, you should be looking at a 1-hour chart and counting how many days it's been down. Has it been down 7 to 10 days? Well, let's count. It got underneath here. And then you had Tuesday, Friday, Monday, Tuesday. What is 1, 2, 3, 4, 5, 6, 7? That's day number 8. And then it started to go up because stocks don't go down for 100 days. All right? They just don't do it. The sell-off happens, then it starts to go back up in price. 7 to 10 days, 7 to 10 days, 7 to 10 days, 7 to 10 days. Let's look and see if there's unusual options activity for Nike. Well, for the week for you traders, it looks like it's even. 4,800, 4,800. I ain't trading this. It already looks like it's going down. What I'm gonna trade it to the upside. Should I buy puts? It's even Steven. But if I had to buy something and I see that the market looks like that, then I'm gonna trade to the downside. Very easy way of looking at the market, flipping it. Let's look at another stock. Time is at 7:40. All right, let's look at somebody gave us a twofer, BBIG and Palantir. Now, I've never heard of BBIG, so you got me on this one. So let me check BBIG, make sure that it's not a penny stock. Let me go to my stock search. I can't show anything that's less than $1 billion because I'm a personality and I can't do what we call pump and dump schemes. Hold on. BBIG. All right, BBIG is a $400 million company. Can't show it. It's got to be $1 billion or higher. Sorry about that. But I know about Palantir. Palantir is one of the Cathie Wood stocks. Cathie Woods loves Palantir. I actually own Palantir myself. All right. If you're into tech stocks that like they're into the technology of storing information, this is one of those companies you want to buy. Now, what I don't like about it is look at what this 200-day is doing. It's starting to angle down. I don't like that. But I am an investor 5 to 10 years out. So what I do like about this, even though it's underneath the 200-day, when the 200-day angles down like that, my brain says, if I buy this, I literally have to give myself like a year to 2 years because this line can go down and this can get even worse. So you want to be careful when you're looking at something like this. Okay? You want to be careful. Give me a quick second. Hold on. Just making sure that this is correct. All right, yeah. Okay. I was pulling up BBIG on another device. So yeah. So Palantir going down. So the trend looks down right now. Look at all this red. Like, that's not telling me that, that's not making me feel good about buying this. Let the trend end. When the trend ends and then it starts to go up and it's green, the next place it's going to is 23. Okay. But it's gotta get people to buy it first. And again, you and I ain't the ones that's gonna buy it. Now, if I looked at unusual options activity, like if I went to Palantir and I was thinking of counter trending, and I went out to January and I saw like 20,000 contracts being bought at a high strike price, then I might consider counter trending. But look, guys, even in January, the most contracts are puts. When I go to February, look, January, I see 6,000 here at the $20 strike. So, that's pretty unusual. But then I go over here and I see 32,000 open interest, 50,000 open interest. I go to February, I see 17 and 12. Palantir is just not showing me that. Look, I see more action to the put side than I do to the call side. So I'm really not feeling comfortable with it, buying it just because it's here. I want it to start going up and then start seeing unusual options activity on the call side, but I just don't see it. Palantir right now, though, if you are just buying it long term, because I don't want to scare my investors away. It looks like it's down 60%. 60% is huge. And it's approaching a support area right here. That area right there of support, we haven't gotten there yet. We probably gonna hit it. That's the only reason why it's been going down, 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 because it just wants to go ahead and get it out the way and hit this $17 area. So I'm going to set an alert there too. And when Palantir gets to that level, so that you guys can see it, when Palantir comes down and it gets to this little area, here's the some of you guys couldn't see it. There was support here. There's your double bottom. Here's your head and shoulders. Look, that's a head, shoulder. For those that are learning patterns through the candlestick book by Neeson, that's a head, that's a shoulder, that's a shoulder, right? That's the most bearish pattern you can ever see in the market. Like, there's nothing more bearish than that pattern. When you see this pattern form, run, because we're probably going back to the neckline from where it started. And sure enough, we close to it. So just let this bad boy drop. You shouldn't be buying Palantir right now, even as an investment or a trade. Now, if you're trading it, you trade it to the downside. Why? Because 7 to 10 days. 7 to 10 days, right? So when it got underneath here, 1, 2, 3, 4, 5, 6, 7 is really the 7th day now. 7 to 10 days. Very easy. 7 to 10 days. 7 to 10 days. 7 to 10 days. Let's look at ERO. What the heck is ERO? ERO? ERO. Okay, it's $1 billion. We can look at that. And BHP, British Petroleum, I think that is. No, that's BP. BHP is pretty big as well. All right, so let's look at, what was it? ERO and BHP. ERO and BHP. All right. So ERO. $200 days. So this is like a commodities play, right? ERO copper. These companies do really well during real estate periods where the market's going up, and as you can see during let me pull up the clean 200-day chart. During this period, It struggled, but look, people bought it at the 200 day. They bought it at the 200 day. It moved up in price. It got close to the 200 day here, got close to it here, and it touched it perfectly here. We hit it again here, and now it's kind of struggling. When you see it struggle like this, which is this triple bottom underneath that 200 day, be careful. It did pop, but what it did was it formed what we call a channel. And when that channel forms, you know, it's just going to fluctuate between it. You see that? It's just going to go up, down, up. Sorry. Up, down, up, down, up, down, up, down. It's just ranging. It just ranged to the side, and it ranged from July all the way to November. It didn't really know what it wanted to do, but everybody was buying it at 17, selling it at 21, buying it at 17, selling it at 21. When you see that happen, and it breaks one of the areas. So it either was going to break the support and drop, or it was going to go above here and shoot up to the upside. But what it ended up doing was it broke support right here. It broke that support line. Once it broke that support line, we kind of knew where it wanted to go, which was this area. This is for your investors. And then the next area is going to be down here. So you got 13 and then you got 11. Okay. But it's formed a head and shoulders. Look at this head, shoulder. Very bearish pattern. Ranged. And then it started to go lower. It looks like it's almost at the end of that move, but what you got to wait for is let the move happen. Don't try to get in front of a moving train. It's a moving train going to the downside, and it's going to keep selling, selling, selling until it finally breaks this trend. The first place we're going to run to is that $19, because a stock can be bearish and it can still hit that 200 day and then do the reverse and then start dropping. All right. So that was ERO. Let's see if there's any unusual options activity. There are no options, so that's great. I mean, it's not great, but that's less work for me. And let's look at BHP. BHP is, well, BHP Group, I don't know what they do, but this 200 day is angled down. That's not good. I don't want to see a downward facing 200 day. Now, we could go back to 66, but because it's angled down, it's probably going to do this. When you go back to when it was angled down a long time ago, watch the pattern. When it's angled down, it hits it and then goes lower. Hits it, goes lower. Hits it until it starts to go up again. See, when it's down, what happens? It probably is going to come up close to it and then continue to go down. So when it's telling you what it wants to do when it's angled down. When it's angled up, they're going to buy it here and it should go higher. See? Because that's bullish. Look at that. It's bullish, very bullish, very bullish. But then when it struggles, and it breaks below it and then it breaks that support, oh no, now this 200 day is down. It hit it. Oh, okay, then it started to go back up again. Oh, because it's angled up. So even though it hit this, it sharply went up, and then that line started to flatten out so that when it hits the 200 day again, it goes up. Then when it finally hit it here, I get it. I can see why you might have wanted to buy it here. But remember, guys, nothing is 100%. Right? There was some support right there. If it gets here and then it breaks that support, it's probably going lower to the next support level. When that happens, you can't, it's not your fault. It's just that maybe some negative news came out, maybe something happened with the CEO. All types of things can happen that can make a great stock all of a sudden go down. That's what Apple did, right? When they found out Steve Jobs was sick, nobody could foresee that happening. But you have to know how to react once that news comes out. And you know, we don't know what's going on, but this is now angled down. You can get in here, but don't expect it to go back to here. It's going to struggle for a second once it hits that $66 area. All right, let's look at Nvidia. Nvidia is the Oh wait, first of all, let's look and see if there's unusual options activity. This is all the way out to January, February. Don't see any. Well, that 17,000 is crazy. So that's unusual. That's at the $60 strike. But I don't really see anything that's jumping out at me except this 60,000 here. But what happened to it? Or 17,000. Oh, 17,000 at the $60 strike. Okay. Let's look at Nvidia. Number one semiconductor on the planet. Some people think that this stock is actually going to become the largest company on the planet, surpassing Apple and Microsoft. Why? Because they're involved in everything futuristic. They're involved in the metaverse. They're involved in cryptocurrency mining. They're involved in the electric car space, not only running the electric cars, making companies and making products have interoperability, meaning computers being able to talk to other computers. Again, driverless vehicles to allow these vehicles to drive themselves on the road. They're going to have to be able to communicate with each other and communicate with other vehicles. So they're going to have to be able to talk a different language. Like imagine having an Apple phone that can talk with an Android device, right? Nvidia is trying to be that semiconductor that crosses all borders. And if that happens, they're going to be getting revenue from all different areas because everybody's going to need them. So Nvidia and AMD and Micron and Taiwan Semiconductor, these are all companies I tell people you probably want to like create what I call stock mortgages in them and buy them over and over again because I've been making a killing off of Nvidia. I've been recommending it way back here in 2016, 2017. And I called out Nvidia. I said Nvidia will be probably one of the top 10 companies on the planet, further down the line, just because of what they were involved in at that time, and their beta was high. What they were doing was so revolutionary. It was just a no-brainer buy. And they were a no-name company. And then this is one of the companies that that kind of made me kind of popular because nobody was really talking about Nvidia. My son was talking about it when he was 9, 10 years old. He's 14, 15 now. So even my younger son had been talking about it for 5 years. He's schooling me on what Nvidia is involved in. So we made a lot of money off of this particular company, just to say that, right? And I was buying Tesla right around this time as well. But Nvidia from 2015, when I started recommending it, I mean, guys, look at this chart. I mean, come on, like you guys got to learn how to make these easy buys, right? Let's count how many times it's won since 2016, right? So if it hit the 200-day there, that was one. It didn't even give you a chance to hit the 200-day again. Hold up, that was 2016. It then touched the 200-day moving average again to 2018, 2 years later, and it was angled down. Remember, all stocks went down because of that Trump thing. Trump scared everybody on that impeachment. Then we felt comfortable. We realized he wasn't going to get impeached. There's another buy. And I mean, when Nvidia hits the 200-day moving average, people load the boat because they know that it's rare when it happens. Y'all see all those wins? Like what? It won every single time except during the impeachment of Trump. because fundamentally people were scared and they were like, I'm selling all my stock. We don't know what's about to happen. So where are we at? Where are we right now with Nvidia? Well, Nvidia is way up here in the stratosphere. These are one of those stocks you got to pull up the 50-day moving average, maybe even the 100-day. So when you go back to something like 2019 and you're buying something like this and you're buying options, 50 days out, you see how it's hitting the 50-day? You want to do the same thing, or the 20-day. One of those stocks that can really make you a lot of money because it's so bullish. There's a semiconductor shortage. So not only is this company involved in everything, there's a shortage of these semiconductors. So when you're talking about supply and demand, this was like a no-brainer trade. And I mean, it was making people a lot of money. Look at that. Every time it hit the 50-day and the 20-day, it just made you, it was like a ATM. That was a period where that was only that was about 50 days. Then there was a nice little push. This was that move back in March, hit the 50, and then it went down just to the 200-day. And then it started to run again. Hit the 50-day and the 200-day, then it started to run again. 50-day, 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 starts to run again. Now we're sitting at the 50-day. If we break this, which it looks like it wants to do, y'all see how I already have an alert there? And I'm going to set an alert right. I'm going to set an alert down here. See, I'm killing two birds with one stone. Set my alerts and teach you guys at the same time. So, investing wise, how would I approach this? How would I approach this as an investment? Well, first of all, we need to know how much it's gone down in price. 346. It's down 21%. Okay, 21%. So that's on sale. You're getting it 21% off. One of the best companies on the planet. People argue that it might be the best company on the planet. Down 20%. Is 20% normal? Well, if you go back and you check how many times it sold off, does it sell off 20%? Like, is that normal? Well, when it sold off here, that was 11%. When it sold off here, that was about 13%. When it sold off here, that was about 15%. When it sold off here, that was about 17%. This was 26%. This was 16%. So it's kind of telling you that over the that was September. When it sold off here, it sold off, that sold off 43%. That's crazy. When was this? February. Oh, this is the March lows. So of course it's going to sell. This was the pandemic. I was like, why did it sell off 40%? So y'all see that? Since the pandemic, Nvidia sells off 16 to 20%. Not because Joel said it, but because you're going to learn how to do this on your own. So that if you're thinking about buying one of the best companies on the planet as an investment, you say to yourself, it's on sale 20%. But if it drops to the 200-day, let's say it gets all the way there, that's a 40% drop. If Nvidia drops 40%, y'all need to load the freaking boat. LTB. Because when we panicked, when we thought that the world was coming to an end, Nvidia sold off 40%. So that tells you that if it sells off again, one of the best companies on the planet, you guys got to take a shot right there. I'm sorry. Those are the types of stocks that you buy ridiculous options on it. And if you lose, you just lose. But there's some no-brainer trades. And that's one. Apple was a no-brainer trade during the March lows, including Amazon as well. This would be a no-brainer if we get to this level. We're at 20% now, and it does look kind of bearish. If I was looking at a 1 hour chart, this looks bearish. Doesn't look like it really wants to turn around yet, right? Even from this Tuesday, if you count 7 days, it ain't been 7 days, it's been 5. So, it had a nice little jump and then it jumped right back down. Don't buy this stock until if you just have to buy it to the upside, wait until it starts moving to the upside. But right now, you have a wall right here keeping it down. So it can move back up to 300, but it's got to get to like 310 or 320 if you think it's going to continue to go to 340 and higher. Or if you just got to be a counter trender, buy it when it hits there at 40%. I'm probably going to do that. Like this is one of them companies where I'll counter trend and then I'll show my receipt and say, all right, I believe you on counter trending for a stock like this. Then you ask yourself, is there unusual options activity? So if I was buying this for the end of the week, Friday, there's 22, but I see 20 over here. 20 and 20 is not what I like. Now, I do see multiple 20s, 20 here, 20 here, 20 here. So I see why people are doing it. But if I wanted to go a little bit further out, I just don't see anything. There's 8,000 here. That's unusual. $300 strike for, if you guys want to take a shot at the $300 strike, there's some unusual options activity there. And then there's some at the 300 strike here, 315. But again, I don't really see anything super unusual. Shoot, what's unusual here is that there's 5,000 here to the downside. That's not good. February, I don't really see anything. March, I don't really see anything either. So I love Nvidia, but it might drop some more. And if it drops more, it doesn't mean that something's wrong with the company. This company is considered the best company on the planet. So those types of stocks sell off. Apple has sold off 20 and 30% as well. And then it ratcheted right back up to the upside. All right, that's in Nvidia. All right, cool. Let's look at the, somebody asked, is there a heat map for crypto? Okay. Is there a heat map for crypto? The answer is no, not yet. All right. But what you can do is, remember, I'm teaching you guys price action. So when you're learning price action, that means you're going to be able to use this on any and everything. Like, people think that what we're looking at now just works on stocks. No. I created a universal method because over the last decade, I wanted to simplify things. And I said, guys, what can I teach that works on everything? I don't want to have a strategy for crypto, a strategy for Forex, a strategy for futures, a strategy for stocks. That's just too much thinking. I'm getting too old. Everything has to be simple for me, right? Even the clothes I wear, like I wear simple clothes. Like I got a certain style. I might change some colors, but I'm pretty simple. As I get older, I'm simplifying everything, right? So what I would do is I would actually pull up something like the Bitcoin futures. And if you wanted to trade, if you wanted to kind of know what's going on with Bitcoin, I want you guys to do the same thing. You pull up an hour chart and you say, are we underneath this yellow line? If we're underneath this yellow line, we're probably going to the 200-day, or we're going to go down. Now, crypto tends to go up and down different. So instead of 7 to 10 days, I would increase it to like 10 to 20. Okay, crypto can run for 14, 20 days, which is crazy. So Bitcoin, when it started to go bearish, it went bearish for about 1 week, 2 weeks, 3 weeks. Looks like it's about to turn around. Okay. And when it turns around, crypto goes up for 2 to 3 weeks. Y'all have experienced it. Okay. So it's just bearish right now. When it hops above this yellow line, you might want to buy it. But where are we sitting at with Bitcoin? A lot of you guys didn't notice. We sitting on the blue line. Look at what happened every other time you bought it at the 200-day moving average. Look at that. Bam, you made a whole bunch of money. Bam, you made a whole bunch of money. Maybe crypto's about to turn around. But if you want a confirmation, just wait until we break back to the upside. It will go from 50 probably to 70 or 90, but not until we break that particular trend. Let's see what it's doing as far as the 50-day and the 20-day. See, even at the 20-day, it made you money. 50-day, it tried to bounce. Now we're at the 200-day, but it still looks a little bearish. And if you go back and see every time Bitcoin hit the 200-day, you're going to be surprised too. You're going to say, you got to be goddamn killing me. I could have used Joel's strategy and known when to buy crypto just by looking at this Bitcoin futures. And I would have been like, yeah, that's what I've been using, because I preach. I mean, what I preach, I practice what I preach. A lot of people don't practice what they preach. They preach. Could have made some money there. This was 2000 and this was the March lows. So when the March lows happened, we dropped below it, but then we went up. And then guess what we did, guys? We came back to the 200-day, gave you a chance to buy. No, we're talking about Bitcoin. We ain't talking about stocks. And you haven't seen the 200-day since the March lows, I don't think. Oh, yes, you did, right here. This was July of this year. So after we hit the March lows, and then we kind of stayed away, but then it started to balance out. It started to go sideways. Then it started to angle up. That's when Bitcoin really started getting bullish, because the institutions all said, all right, this is the time to start buying it. Then we ran from 10 to 13, but now the 200-day is angled up. We broke that trend, started to go green again. Then we ran from 11 all the way to 20. Then we came down, broke this little trend, started going back up, went from 20 all the way to 40. Wait for the trend to break. Y'all be thinking that the move, like I keep telling y'all, even with crypto, you can wait. The trend broke and you had 1, 2, 3, 4, 5, 6, yeah, like 7 days to get in. Quit trying to get in on the first day. Y'all do it all the time and it cracks me up. Then it moved up. Then we hit the 200-day right here. Very great opportunity to buy. Gave you 2 months to buy Bitcoin. It would not break lower than 30,000, because all the institutions was trying to get in. They was like, oh my God, we're at the 200-day. It's angled up. Everybody and their mama knows that this is bullish. Gets up, hits the 200-day. Goes up, hits the 200-day again. And guess where we at right now? The 200-day, the 200 day. So we got to sit here and wait, because this bad boy can go lower. We actually can break to this low. We can. Just because we hit the 200-day don't mean that we out of the woods. It just means if you go out about 100 days, 200 days, we should be higher if this can maintain a sideways to up move. All right, so I set an alert here. Hopefully we can get back up above 50. If we can get above 50, we got a chance to go back to 70. But this might be the beginning of the crypto winter. All right, so you can use Bitcoin to do that. All right, just because I'm feeling, I'm in the Christmas spirit, I'll go over just a little bit. All right, let's look at Walmart. Let's look at your e-commerce companies. Walmart sitting at the 200-day. Investors, you should be buying it right now. All investors, if you've been waiting to buy Walmart, this is the time to buy it. You're getting it on sale. It's Walmart. It's Walmart. It was down 12%. So I get this all the time. But Joe, didn't you say stocks dropped 20, 30%? Yeah, but not Walmart. You got to check the beta. When Walmart drops 10 to 15%, investors love buying it. If you don't believe me, you got to go back and check. When it dropped in price here, you write this down, 17%. Great. When it dropped here, it was 10%. So 10 here, 17 there. When it dropped here, it dropped 12%. 10, 12, 17. When it dropped here, it dropped 17. So I guess Walmart can drop 20%. So you got 18% there. But as you can see, nothing more than 20% because it's Walmart. So then you say, all right, well, let me just go back a little bit further. I ain't got time to do every single one, Joe. Just do the big ones. Okay, let's do this one. This was a 25% drop. All right. So Walmart, I guess, does give you a 25% drop. But guess what, guys? We just went all the way back to 2018 when they were going to impeach Trump. I said when they were going to. He did get impeached. So unless we're experiencing something like an impeachment or a pandemic, Walmart ain't dropping more than 25%. Because even during the March lows, if that was a 25% drop, this is how I think. If Walmart dropped 25% during the impeachment, and then during the March lows, it dropped 18%. 18 is the floor. You literally, for the rest of your life, not life, maybe the next 5 to 10 years, just calculate and say when Walmart drops 15 to 20%, it is an all-in buying opportunity. Very, very easy. I don't have to listen to TV. I don't have to listen to them say what they're going to do in the future. I don't have to look and see how much money they have in the bank. I don't have to check their price to earnings ratio. Y'all be doing too much to make money. Y'all do. It be driving me crazy when people like me just go in there and say, when is this bad boy on sale? Nothing more than 20. If I see Walmart down 20%, I'm going all in. Because it's proven that this is the type of stock that traders like, unless there's just like such negative news on Walmart, but there isn't, right? It's Walmart. And right now, it's down, 11%. So if you buy it, what are you saying to yourself? Even if I put $10,000 in Walmart right now, if it drops 7%, I'm going to be down $700. Can I stomach another 7% drop? And if it drops 7%, am I willing to buy more? Because where's the 18% or 25% mark? It's going to be right here in the 130 range. I don't think we get there. I think we hit 11. And then, wait, that's 11%, 12, 13, 14. If it gets to 18%, I want to see if there's any support there. So when I look at the chart, I do see a mark right here. If Walmart gets to this 125 level, I want y'all to go all in. Joel said it. All right. There's some trades that you just take just because. This is one of them. If Walmart figures out a way to get to 125, that's when you buy options 100 to 200 days. And when you make your money, you send me a gift. Okay. I already set my alert. If we get there, I'm going to set another alert. And I'm going to say, guys, this is one of them times you make money. All right, that's Walmart. All right, let's look at Shopify. Oh, sorry. Let me show y'all the screen because you can't see it. Bam. There it is. I put an alert down here. This is the yellow. This is the support area. If Walmart drops 25%, it's going to hit a support area that it hit earlier this March. And if it hits that area, this is one of those trades you just take. 100 to 200 days out. Okay. Give yourself some time for that trade to work out. Let's look at Shopify, one of my favorite e-commerce companies. Shopify is also hitting its 200 day. I know, guys, it's like Groundhog's Day. I'm not picking these stocks. Y'all are. Every time it hits this 200 day, people are buying it. All right. You got to know when to buy. Look, it hit it here, went up. Hit it here, went up. Hit it here. It won 100% of the time. So now, yes, we're hitting the 200 day and we're going a little bit lower. So how much can something like Shopify drop? Why do I like Shopify? Shopify is the Amazon of Canada. It's the number one. It's down 28%. It's the number one stock for small businesses, right? Have y'all ever gone to like a mobile, like most mobile jobs, like a cleaning company for your house, cleaning the carpet, or if you're out and about at like I don't know, the flea market and you're buying products and they pull out that white machine and then you're swiping it, that's probably a Shopify product or Square. Okay. So this move was 22%. What I'm doing now is I'm going back to see how much it drops before traders start to buy. That was 32%. So that was 30%, 20%. This was a 28%. So it looks like Shopify drops like 30%. Ooh, that was 40%, but that was the March lows. So if the biggest, baddest sell-off is 50%, you should feel comfortable with Shopify if it drops 30%. So how much is it off right now? 27. 27. That means we're approaching probably the lows, right? You really believe it's going to drop even if it dropped to here, guys, if it dropped to here, this next support area, that's a 42% drop. It hasn't dropped 42% since the March COVID lows. Can it drop to that mark? Yeah, because you have some support there right here. So if we get there, 42%. If we get there, y'all better load the boat, because if it dropped that much during COVID and you see that the 200-day moving average is angled up, that's going to be an area that a lot of traders are going to come in, including myself, and really, 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 really load the boat. All right, I got to get out of here, guys. I see all of your stocks. I'm sorry. If you come in late, I'm sorry, you don't get your stock looked at. I'm gonna quickly look at your stocks. All right, I'm gonna quickly look at it. All right, let's look at Jumia very fast. Jumia. I know I've been pumping Jumia. Jumia looks like it can drop to $6, guys. I'm buying it as an investment. Why? Because it's down. Let's look and see how much it's down. Jumia is down a whopping, hold on. Jumia is down a whopping 85%. I mean, once you start getting down in the 80, 90% range, like, you just got to buy the stock as an investment. Because if it ever gets back, even if it gets back to this 24 mark, this is what really matters. If Jumia can get from 11 to 24, you're gonna double your money. You're gonna double your money if it gets to 24. If this bad boy messes around and goes back to its all-time highs, and you got a 90% chance that it can happen if this company doesn't go bankrupt. This is the Amazon of Africa. If somehow or another we get some buying again, you're gonna make 7 times your money. This is how people get wealthy. You got $10,000 sitting in this bad boy. That 10 can go to 100. Okay. I'm not telling you to put all of your money in, but it looks like it formed a bottom here. It looks like when it sells off, it forms a bottom and then it rips to the upside. It's not a penny stock. This stock is worth, a couple of $1 billion. And that's what you're looking at, the growth potential in this e-commerce play. So let's look at PayPal, one of my favorite. PayPal's another one I'm loading the boat on right this second. This is the month chart. All right, the month chart looks like it can come down to this little support area right here. Okay. And then the next support area is going to be down here. Now, what are the chances of it getting all the way down there? Well, how much is PayPal off right now? We haven't seen a sell-off like this on PayPal in years. So PayPal is now down 42%. The last time we fell something like that, we fell more than that during, well, this was a 29% move. If you go to the March lows, which were here, y'all see this is the March lows. Y'all know PayPal only sold off 35%. Well, we're down 42%. So I think the end of the move of PayPal to the downside, I think we're getting close to it, because there was some major support here in the 170 range. And I think it gets to here and starts to roll back up. So you investors, I say load the boat. This is the time. The next level, though, would be this 87. I just don't see us going back to the prices from the COVID lows. Not when we're about to print, $5 trillion. I just don't see it. Can it happen? Yeah. Will it happen? I'm not betting on it happening. It looks like we've been going sideways from November the 18th. That is a good sign. When a lot of people are buying something over a 30-day period, from 11/18 to 12/18, the price would not drop lower than 173, because anybody that was afraid of PayPal is completely out of it now. So all you have now are your true investors. Because if you were going to sell PayPal, why are you still in it? It's down 40-something%. You're either sold it and you're already out of it, or you're like, oh, well, I might as well hold it now, and then lost 42%. You're not getting new people that are like, I'm about to sell, because it's just not a smart move. I can't see a $1 billion pension fund selling something like PayPal. Like PayPal it's like selling Apple, right? It's one of the leaders in the fintech space. Now, I understand that the fintech space is selling off because, the buy now, pay later model is failing, right? People are not making that first and second payment. And I think companies like PayPal are getting killed because of that reason. They're also involved in crypto. They're also involved in a lot of other stuff. So high beta stocks that's made a lot of money are going to sell off first. But I think it's just been an overreaction in PayPal. And you guys are literally about to get a stock at one of the best values you can get it at. Let's look at AMD. AMD is like Nvidia, right? Semiconductor company that should change the world, involved in everything. Well, it looks like short term is going down, right? I don't really see any I really don't see any it's way up here. You done made a whole bunch of money. I think I'm up 150% from my buy. Where did I buy it? I know I'm just up big. I think I got in at 70 or something. Nah, I'm up over 100%. So I must have bought it somewhere in this range. Somewhere around October of I bought it in 2020. So I gotta check and see how much I'm up. But there was a buy right there. This was a buy. Broke trend, went up, buy. Broke trend, went up, buy. Hit the 200-day, buy. How much is it down now? Not down that much. It's only down, it's only down 19%. Last time it dropped 18%. So that's about right. Last time it dropped from there, that was about 26%. So I think you're close to the end of the move. But if it drops to the 200-day, you're going to get a 37% drop. That stock can drop 37%, people, and still be bullish. So what Joel's going to do is he's going to set an alert here so that if something like this happens, I'm going to capitalize on it and I'm going to make a lot of money. All right, that was AMD. LeVar said that the metaverse is just more advanced Second Life for those who ever played Second Life. If you want to get an idea also of how the metaverse works, go and watch Player One. Very good movie to watch during the holidays with your kids. Even if you watch it by yourself, it's actually pretty entertaining. But it gives you a look into how the metaverse actually can be and how it's actually operating. Now, it's actually more advanced where you're driving around cars and stuff like that. But it kind of feels that that's the direction that we want to go, in. All right. Sheena's always laughing at me. Nike killed its earnings today. All right, so I'll take a look at it. My cousin said, "Bye, bye, bye." He's saying that the market is on sale, right? The market's off. This is a time period where the market kind of sells off, sells off. So, try to take a look and see what's going on. Micron is another semiconductor company, so you might want to take a look at it if you're looking for beta. Noble also said show Tesla and Lucid. So I'll go ahead and show that one real quick. Let's look at Lucid. Lucid is what we call the Tesla killer. The Tesla killer. All right. Lucid has got, dang, I'm having a tongue twister. Lucid had the highest EPA rating for any electric vehicle, and they had a 515-mile charge per charge. Like if you charge the car up all the way, you get 515 miles. They said in the next 5 years that they're going to have cars, guys, that get 1,000-mile charges. So I don't ever want to hear people talk about running out of electric charge, right? There's no vehicle out there right now that's going to give you 1,000 miles, except one of those cars that most people wouldn't drive back in the day, those one-seater, one-seater vehicles that only travel 15 miles an hour. They got solar panels on them. Those are the only cars that get 1,000 miles. Well, you're about to get cars that have 1,000 horsepower faster than anything on the road, and it still gets 500 to 1,000 miles per charge. This is what's coming. This is why every car company on the planet decided to go electric. It's just more efficient. I know that you guys want to hear your vehicle and smell the smell the exhaust while you're driving, but we just need to move in a more efficient way. So I know you guys want to hold on to the past. I know you guys still want your Blackberries and your flip phones and your and your Nextels, but you got to move to the next level, and the next level is electric cars. But Lucid is selling off, and I'm surprised you guys are still on. I'm like tired, but Lucid dropped the Tesla killer from the all-time highs, has dropped 43%. Guys, stocks like this that have high beta, they're gonna drop 40 to 50% every single solitary year, including Tesla. So when it gets to the 200-day moving average, a 60% drop on a stock like this is normal. When it gets here, I want you guys to maybe, I'm not saying load the boat, but this is where you guys are gonna get a great deal on a company that everybody's looking for, but quit trying to buy a falling knife. You see where it can fall to. You see the candles are red. Let that bad boy fall and then decide to buy it, okay? Oh, let me take this off so you can see it. Okay, there's the 200-day. Looks like this is where it wants to go to. Okay, let's look at Tesla so we can get that twofer. Tesla hits the 200-day moving average here. And sorry for you guys that needed to go watch the other YouTubers that are dropping stuff. But believe me, these YouTubers ain't showing y'all charts. Tesla, you could have bought it there. You could have bought it here. You could have bought it here. You could have bought it 3 times right here. You could have bought it here. And you would have made a killing. All right. Let's remove price levels. Now it looks like it's just going down, guys. Let Tesla come in. Let it come in. It looks like it just wants to go to the 200-day. Remember, Tesla drops 50% every single solitary year. This ain't no difference. If it drops to the 200-day, y'all know it's only going to be down 38%. That's normal for Tesla. A 38% move is nothing for them, because they know that if it drops 38%, if it ever goes back to its highs, and we know that it will go back to its highs, you're going to be up 64%. Y'all see that? A 30% drop is going to yield you a 65% move back to the upside. That's why traders are dollar cost averaging as we go lower. Y'all see all these alerts I have on Tesla? That's literally so that I can catch this move back to the upside. So if you don't believe me, do it yourself. I don't care if you don't believe me. Take out this little pencil and say, how low did it drop the last time it dropped? 39%. Well, let me go back again. How much did it drop back during the COVID lows or 2018? Well, this is the COVID lows. How much did Tesla drop when everybody was sitting at home and nobody could afford a Tesla? The scariest moment for Tesla ever, not ever, but it dropped 64% right there. And that was under extreme conditions, not 70, 80, 90, 60. But then, since then, Tesla dropped, it gave you a drop right here. That was 24%. It gave you a drop right here. That was 34%. It gave you a drop right here. Well, this is considered the same thing. It gave you a drop right here, which was 39. And now we're sitting at, oh, that was 39. That was February of this year, 39%, almost 40. And then now it just looks like it wants to do what it does every single year, go back to this 200-day, and that's a 37. Earlier this year, it dropped 39%. So why wouldn't it drop 39% again? You guys should have alerts like crazy right here, so that when it hits it, everybody can jump on the Tesla bandwagon again. If it drops lower, that's fine. It can drop as low as this 542 area. It can drop over 50%. Remember, during the COVID lows, it dropped 64. But 60% should be the floor for a stock like this. All right. All right, I got to get out of here. I'm tired. I got to go eat. Sorry, Daryl. Sorry. You guys go look up these companies, LRSX. That's a stock tip. I don't know what they're doing. Look up, I'll pull them up as I'm writing them down. All right. LRCX, we're just going to do a visual. LRCX, this is what's happening. Hit the 200-day moving average. All right. We got TSEM. Why didn't it pop up? There we go. We got TSEM. I don't know what this is. Tower Semiconductor. Well, if it's a semiconductor company, it's probably doing well. 200-day, 200-day. Why are y'all buying it way up here? All right, check and see how much it sold off here. I always say I'm not going to do it, and then I go in there and do it. Y'all see how much I love y'all guys? It dropped 26%, so look for another 26% drop. It dropped again here, 53%, but that was the March. No, was that the March lows? No, this was, yeah, that was the February, March lows. All right. But we way up here. All right. Goolsby said, look at the January calls. I don't know on what stock. January calls on, you got to give me the stock. Fransky said, appreciate it. Thanks for the educational segment. You just presented highly appreciated, brother. No problemo. Facebook user said, thank you for simplifying this information. I try my best. I try my damnedest. LeVar says, I think Elon has one more stock sale left before the end of the year. Okay, we'll take a look at it. It can drop 39%. Derail said, or Daryl said, you have dropped a lot of gems. Thank you. Sorry if I mispronounced your name. I apologize. Grammar is not my forte. So I think we looked at pretty much everything. Again, educate yourself. Educate yourself. Please educate yourself. I'll see you guys again after Christmas. And again, you know, I wait, hold on for a second. Let me go back to the comments. Again, make sure that you guys are setting your alerts. If you need education, you guys know where to find me. If you need to book a consultation, you guys know where to find me. All right, I want you guys to take advantage of my membership program. There's a lot of gems that I give in a lot of my videos, and I want you guys to understand the quickest way to making $1 million is not saving $50,000 a year for 20 years. You're already doing that in your boring accounts, in your real estate. You guys got to start generating more beta through your trading accounts. All right. It shouldn't be one or the other. It should be that you're doing it all. But the quickest way to getting to $1 million is this. Uh-oh, it didn't pop up. And peace out. Coming to you guys from Decatur, where it's greater, and I'm out of here. Peace.